Hi there. Thanks for tuning in. As always, my name is Stacey Bartel, President of O.B.S Financial Services here in Oakbank, Manitoba, and I would like to welcome you back to our next edition of Learning from the Tax Masters, Student Credits and Taxes. Over the last 2 days, we've been talking school. We've been talking about students, what tax deductions they're able to get, what's available to help you plan to fund their education. But what about you? Many adults are constantly involved in upgrading their knowledge and expanding their workplace options. In a lot of cases, it's because we want the opportunity to advance and grow. But unfortunately, more and more, it's because some sort of a disaster has struck. Our company has gone out of business. Our company has gone through some downsizing. Maybe it's medical or health reasons, and you're no longer able to perform the duties that you were performing before. And here you are in the middle of your life with a family and kids and everything else, finding that you have to start all over. Well, starting over nowadays normally means needing education. And more adults are educating themselves in their midlife, in their 30s and 40s, even up into their 50s, to get to that next career option. That's all fine and dandy, but how do we do it? If we're looking at a full-scale change in our career path, it normally means going to university or going to college and taking full-time courses, right? Especially if we've lost our job, we already don't have a job to go to, we need to look at doing that. How do we fund these options? How do we pay for it? Well, when it comes to us and our own education, we can talk about the Lifelong Learning Plan. The LLP, or the Lifelong Learning Plan, is very similar to the RRSP Home Buyers Plan. What it does is it allows us to borrow money against our RRS or against our education, right? So we can borrow money from our RSPs to go towards our education, providing we're in a full-time student status. Okay? Here's how the LLP works. Basically, the LLP will allow you to withdraw up to $10,000 in a calendar year from your registered requirement savings plan to finance full-time training or education. Now, in order to do that, you have to qualify for full-time student status, which is 9 hours or more of full-time credit hours. It has to be with an accredited educational program. Now, the $10,000 you're allowed to take out can be to cover all things that surround education. So whether that's textbooks, tuition, even cost of living while you're in school, that's perfectly fine. You can do it, but you're maxed out at $10,000 a year, providing you meet the other qualifications. If you've taken money out in the past, so I guess basically what happens is you can do $10,000 a year. You have a lifetime maximum of $20,000 that you can pull out to help you in your education. Now, the only thing that stops you is if you've taken money out previously and had to start repaying it, you can't take any more out until the previous amount has been repaid back into your RRSP. But if you're taking a 2, 3, or 4-year plan, you can take that money out while you're a qualified student and not have to pay taxes on it until such time that you have completed your designation of your program or quit being a student. So, how do we repay it? So now we know we can take the money out. We can use it for pretty much whatever we need, providing we qualify. How do we pay it back? Well, typically we have to pay it back over a period of 10 years. The 10 years starts 2 years after you've finished your qualifying program. So let me talk about that. Let's say Joe makes a lifetime living or a learning plan or an LLP withdrawal let's say he took it out in 2017 for a qualified educational program, and he enrolled in 2017. He was a full-time student in 2017, and he completed the program in 2018, January or February. For both those periods of time, he's a full-time student. After he's finished school in 2018, he's no longer considered a qualified student for the periods of the year 2019 or 2020, because 2018 he was still a qualified student. So no longer qualifies in 2019. 2019 he does not have to repay. He has to start his repayments in 2020. So you basically get the current year plus one more year of payment free before you have to start putting into it. How do you pay it back? Well, all you need to do is invest money into another RRSP. It's very simple to do. You have to remember this. It doesn't have to be in the same RSP plan you pulled it out from, right? You don't have to do it in the same types of investments, the same institutions. As long as you're putting money into an RRSP, you are repaying it. The only catch is because when you originally put that, let's call it $10,000, you originally put that $10,000 into an RSP, you took a tax deduction for it. When you pulled it out, you didn't have to pay tax. So when you put it back in your 10 equal installments, which would be $1,000 a year, you'd have to put $1,000 into your RSP and claim it on your Schedule 7 as a LLP repayment, not on your tax return as another tax deduction. So what does that mean? What happens? It means that we just reduce the amount of RSPs you contributed by that amount over an even period of 10 years' time. So $1,000 a year off of a $10,000 withdrawal for 10 years. Now, what happens if you miss a year? Can't afford to do it, forget to do it, whatever else? Well, then what ends up happening is we have to add $1,000. If we're talking a $10,000 withdrawal, we have to add 1/10 or whatever your required repayment is. In this case, $1,000 would be added to your income as if you withdrew $1,000 from your RSP. You'll pay tax on that RSP at whatever your tax rate is. So if you're in a 43.4% tax rate, it'll cost you $434 to not put that $1,000 into an RSP. And then the next year, you get the option of either putting back into an RSP or not, whatever the case is. I should also state, just with the lifelong learning plan, is it doesn't have to be your RSPs. It can be your spouse's RSPs. So if my wife has money in RSPs and I decide to go and take education, go into a full-time student status, she can withdraw her RSPs under the lifelong learning plan as long as she puts them back in over the next 10 years. So what that does is it allows for people that have money in RSP or people that don't have money in RSPs to allow to use their spouses. Those type of people probably have money in pensions, which you can't touch under this program because it is registered retirement savings plan contributions only. Alrighty, I hope that explains everything. If you have questions, always, as always, talk to your tax professional, talk to your financial advisor. They're all able to answer those questions as to how, or at least they should be able to answer those questions as to how to pull money out of your lifelong learning plan. Tomorrow's Friday, we're going to be working on a few more things. Tomorrow we're actually going to discuss apprenticeship programs, trades, and what all is available and what to expect your taxes. Because again, those people that are in apprenticeships, they end up missing a bunch of stuff on their tax returns. We want to make sure that they're covered as well. So tune in tomorrow and we're going to go over that. Other than that, I want to thank you for tuning in and have yourself a great day. We'll see you next time. Bye now.